Did the U.S. Fed repo transactions cause the Bitcoin price crash? Next on your 4-Minute Crypto Show. Today's show is from a post by Martin Young at News BTC and brought to you by BitBlockBoom. Take a look at this great Bitcoin conference that I'm bringing to Dallas, Texas for the third year in a row at BitBlockBoom.com. And this is going to be our best year ever. I hope I get to meet you in Dallas, Texas. Last week, the U.S. Federal Reserve pumped more money into the money markets than the entire cryptocurrency market cap in order to control lending rates. A surge in short-term rates threatened to disrupt the bond market and the overall lending system. Now, those cash injections have continued this week as another $100 billion floods into the markets. The central bank's schedule calls for another $75 billion of overnight repos to be sold every business day until October the 10th. Yes, that was right. That was $75 billion every business day until October the 10th. And on certain days, they'll also be offering at least $30 billion worth of 14-day repos. The Fed appears to be back where it was roughly a decade ago, effectively buying U.S. Treasuries from banks on an indefinite basis. A Bank of America research note stated that for all intents and purposes, this will be equivalent to QE, with scheduled purchases of securities. And they went on to state that they estimate over the first year, the Fed would need to buy roughly $400 billion of Treasury securities to achieve an appropriate level of reserves plus a buffer. Now, the repo market, which consists of short-term funding that banks and financial counterparties regularly tap to lend each other trillions, is making the news again, but for all the wrong reasons, and is looking a lot like it did just before the 2007 housing market crash. Now, this week, Bitcoin prices dumped 20% as $30 billion flooded out of the digital asset and back into fiat currency. Once support was broken, the Bitcoin price plunged to its longer-term floor at $8,000. So the question being asked by some industry observers now is, are the repo agreements and Bitcoin price action related? Since Bitcoin is priced in dollars, it's entirely plausible that there could be a correlation with demand during a dollar shortage. If one is sold to get more of the other, this could be just what happened to Bitcoin, as its market capitalization has just shrunk by $30 billion. At least it's food for thought. Let me know your thoughts in the comments, and please remember to subscribe to this show at 4minutecrypto.com/subscribe for a new episode every weekday. I'm GaryLeland, the Crypto Podcaster, and thanks for joining me on another 4-Minute Crypto Show. This has been a CryptoPodcaster.com production.